What if you could predict the next trillion-dollar industry before the world catches on? Cathie Wood, the founder of ARK Invest, has built her career on betting on innovation and taking bold positions on emerging technologies. Her approach to investing sets her apart from traditional Wall Street strategies. While many investors focus on established companies with steady cash flows, Wood looks for industries poised for exponential growth. Some call her approach visionary, while others see it as risky. Today, we break down Cathie Wood's investing playbook, how she makes investment decisions, the principles she follows, and what we can learn from her strategy. Cathie Wood founded ARK Invest in 2014 with the goal of focusing exclusively on disruptive innovation. The firm invests in industries like electric vehicles, artificial intelligence, blockchain, and genomics. Her funds saw incredible gains in 2020, fueled by the rise of companies like Tesla. But by 2022, her aggressive approach led to significant losses. Some critics argue that her strategy is too speculative, while supporters believe she is simply ahead of the curve. Regardless of where you stand, her approach is distinct and worth understanding. Before we continue, a quick disclaimer: this video is for informational and educational purposes only and should not be considered financial advice. Always do your own research and consult with a professional before making any investment decisions. The investing playbook. Number 1. High conviction investing. Most fund managers spread their investments across hundreds of stocks to manage risk. Wood takes a different approach. She concentrates her portfolio into a small number of stocks that she believes in strongly. Her portfolio often contains fewer than 50 stocks, with some holdings making up over 10% of ARK's total assets. For example, Tesla has been ARK's largest position for years, even when critics argued it was overvalued. Why does this work? If the right companies are selected, the potential for returns is significant. Wood believes that a handful of groundbreaking companies will drive future market growth. Instead of diversifying broadly, she focuses on companies she thoroughly researches and understands. Number 2. Betting on disruptive innovation. The risk? If a top holding underperforms, the portfolio can take a substantial hit. In 2022, Tesla's 70% drop had a significant impact on ARK's performance. Rather than investing in established industries, ARK targets emerging technologies that could reshape entire markets. The firm focuses on sectors with high growth potential, including electric vehicles, Tesla, Rivian, artificial intelligence, NVIDIA, YPath, genomics and biotech, CRISPR, Teladoc, blockchain and fintech, Coinbase, Square. Why does this work? Disruptive companies often start small but can scale quickly. Many of today's largest companies, like Amazon and Netflix, were once considered speculative. Wood argues that Wall Street often undervalues future potential. The risk? Many companies in these sectors struggle to reach profitability. Some industries take longer than expected to mature, requiring patient investors. Number 3. Ignoring short-term volatility. Market downturns don't shake Wood's confidence in her investments. She sees short-term declines as opportunities to buy more shares at lower prices. In 2022, ARK's funds dropped over 50%, but instead of exiting positions, Wood bought more of her top picks. She believes that investors focus too much on quarterly earnings and not enough on long-term technological shifts. Why does this work? Major winners often face years of volatility before reaching their full potential. Companies like Tesla and Amazon struggled early on but eventually dominated their industries. The risk? Some companies never recover, making high conviction a double-edged sword. Betting against market trends can lead to extended periods of underperformance. Number 4. Open source research and collaboration. ARK Invest operates differently from traditional firms by making its research public. The firm shares its investment theses, stock picks, and reports openly, believing that transparency leads to better investment decisions. Why does this work? Encourages idea sharing and allows for external feedback. Attracts top researchers and analysts to contribute insights. The risk? Competitors can easily replicate ARK's strategy. If predictions are incorrect, public scrutiny can weaken confidence in the firm. What lessons can be learned from Cathie Wood's? 1. Concentrated investing can lead to big wins or big losses. Most investors spread their money across multiple stocks to reduce risk. Wood's approach relies on fewer, high-conviction investments. If her bets are correct, ARK can outperform the market, but when they are wrong, losses are magnified. 2. Innovation investing requires patience. ARK doesn't chase quick profits. Instead, it focuses on long-term breakthroughs. Companies like Tesla and Amazon took over a decade to establish dominance. Investors in this space need to be willing to hold through volatility. 3. Ignore the noise. Focus on the future. New technologies are often met with skepticism. In the early 2000s, few believed in Amazon. In 2010, many doubted the success of electric cars. Wood's strategy is based on anticipating technological shifts before the market fully recognizes them. Thanks for watching. If you found this breakdown of Cathie Wood's investing playbook helpful, be sure to like, subscribe, and share to stay updated on future investing insights. Let us know in the comments what you think of Wood's strategy. Do you see it as visionary or too risky? We'd love to hear your thoughts.